You are listening to chartingwealth.com for Thursday, the 9th of June, 2016. Let's jump right into the markets. What do we see going on? Well, we always start with IYY, which is an exchange traded fund that tracks the whole market. It's iShares, Dow Jones US Total Market Index Fund. What do we see going on? Well, we have a new candle that is being drawn at this point, a new 2-day candle, another green up candle. Total market was up 0.32% for the day. We count 1, 2, 3, 4, 5, 6, 7. 7 2-day candles. Now, again, this latest candle is only half of that. So 6 times 2 is 12 plus 1, 13. We have 13 days of up movement. Since we saw the market turn around and start moving up on the 24th, we had a confirmed crossover back on the 1st of June, and we have a 2-day trend line that the market is above. We have the derivative oscillator continues to heat up, and the MACD and the signal line are continuing to diverge, that is, move apart from each other. We even see the old 50-day moving average down at the bottom of our screen moving up. We are above the Bollinger Bands, which are volatility bands. They are on our charts listed as blue dashes, and we are outside of that, have been on a number of occasions as these candles have continued to spike upward. When we look at our 2-day, we go from our 2-day to our 4-hour trend line. We can see on the 4-hour trend line it's well above the 2-day trend. We see the 4-hour candlesticks. We saw up movement in the morning and in the afternoon. We're still in a confirmed up move on both the 2-day chart and the 4-hour chart. We have not had an official pullback on the 4-hour chart as of yet. Derivative oscillators continuing to gain energy, and even though the MACD and the signal line are close and at the top, they have not crossed over going down yet. So that is where we are on the total market. Now let's look at the 2-day chart, see what we see. SPY, the Standard & Poor's 500, the SPDR's S&P 500 Trust Series Exchange Traded Fund, represents the S&P 500. That's 500 big companies that represent a lot of the volume of the market. Still in a confirmed uptrend. We had a little bit of a downtrend showing back on the 3rd of June, but again, didn't cross over going down. Derivative oscillator continues to heat up after the market crossed over on the MACD going up on the 1st of June. Like I said, for the day, up 0.31%. If we look at the 4-hour chart, similar to what we saw with IYY, we had up movement in the morning and the afternoon. Derivative oscillators gained a little bit more speed. That is where we are. Confirmed up moves on the short and long chart. Don't have an official pullback on the 4-hour chart with a crossover going down. Don't have that happening yet. Looked like it was getting very close back in the afternoon of the 3rd of June, but that did not occur. Now, let's go back to our 2-day chart, and for the last index, then we'll go to gold. We look at the Qs. What is the Power Shares QQQ Trust Series 1? That is the NASDAQ 100. It had been sliding sideways for a good part of May, and then toward the end of May started moving up. Had a little bit of a pull back on the 2-day candle on the 3rd like we saw in the S&P 500, and then it started moving up again. The NASDAQ 100 is up about half of what we saw in the S&P 500. Like we said, the S&P 500 up 0.31%. The Qs, the NASDAQ 100 up only 0.16% for the day. We saw the derivative oscillator losing a little bit of its speed, but the MACD and the signal line remained about the same distance apart. If we look at the 4-hour chart, we'll see a little bit more. What we'll see is, again, this sideways slide that we've seen occurring. The Qs has been in a confirmed down move, haven't had a crossover going up yet, and we're above the 2-day trend line, but we're waiting for that pullback to end and for the Qs to start going back up if indeed that occurs. If it does, you might find an entry point for one of your virtual trades. We do see the derivative oscillators lost some of its downward momentum, but the MACD and the signal line don't seem any closer. So again, sort of a big sideways slide we've seen going on. Lots of indecision. with what appear to be almost dojis on the afternoon of the 7th and the morning and afternoon of Wednesday, the 8th of June. So that's where we ended on all three of our indexes. Lastly, we will go to our 2-day chart and take a look at gold. What do we see going on in gold? A huge up move in gold throughout the course of the day, up 1.48%. But even with all that up movement in gold, we still don't have a crossover going up on our 2-day chart because of all the strong down movement in gold. Gold still hasn't crossed over. We can see the derivative oscillator losing a lot of its downward momentum, and we do see the MACD and signal line getting closer together. But after 3 candles of up movement representing 5 days, because our last candle is only 1 day of movement so far on that 2-day candle, we do see strong upward momentum in gold, but still don't have a crossover. If we look at the 4-hour chart, what do we see going on? We see the 4-hour chart bumping up in the morning and then pretty much meeting that in the afternoon. So the main thrust up in the market was in the morning according to our Henkin Ashi average pace candlesticks. We see the derivative oscillator lost a little bit of its speed, but again, the MACD and the signal line continuing to diverge as they rocket toward the top. So that is where we ended up with gold. We don't have any entry points yet in that. That is where we are as we look at the markets and go through. Continue to follow your charts every day. Take the training that we offer at chartingwealth.com. If you appreciate what we do us a favor. Go to iTunes. Give us a 5-star rating. We have 2 podcasts there, a video weekly podcast that we put out, usually on either Fridays or Sundays. And that is before the new week begins. It tracks what went on over the last week, what affected the markets, what news might be affecting the market in the coming week, something you should always listen to. We also provide that on our daily podcast. We provide that weekly review and forecast in an audio version, and our daily podcast is an audio version at iTunes. So you can actually subscribe to both the video weekly and the daily audio. We would appreciate you subscribing to one or both, and would really appreciate a 5-star rating. If you've not already signed up for and aren't already receiving our daily emails of this broadcast in video, you need to do that. You can do that so easily by going to chartingwealth.com, giving us your first name, your email address, and we'll start getting it to you daily. Every day the market is open, plus that weekly review and forecast. With that, you'll get 2 bonuses. And again, all this is for free. There's no charge for any of this. You will get our How to Read a Stock Chart video in addition to our charting layout. Now, to use that, first thing you need to do, and you'll see the links there on the email you get, you need to go to freestockcharts.com and just set yourself up a free account. Then you hit the link for our layout. It will then open up your free stock charts, give you our layout, then save that layout. But if you just hit the link to the layout, it's not going to work right. So get yourself a free stockcharts.com account first for free, then load in our layout. Thank you so much for listening. We appreciate you. Follow us on Facebook, Twitter, Instagram, YouTube, you name it. We are there for you from chartingwealth.com.